Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Inflation, it's here and it is everywhere. This should come as no surprise considering that commodity prices, which act as a leading indicator of global inflation, they are skyrocketing across the board, everything from metals to energies to agricultural markets. US data on Friday showed consumer prices in January, they accelerated at the fastest pace in 40 years. The Consumer Price Index, which measures the costs of dozens of everyday consumer goods, that has surged to a whopping 7.5% in January from a year earlier, the highest inflation reading since February of 1982. According to economists, the actual inflation figures, they are much higher than officially being reported because of the obvious understatement in housing and food costs, which is buried in consumer prices. The general consensus among economists is that real inflation figures, they are now in the double digits. Historically, when inflation accelerates at a red-hot pace, so does the price of commodities. So far this year, a long list of commodities, they've already blasted through multi-year highs, including aluminium, copper, coffee, cotton, nickel, palladium, lithium, uranium, and natural gas, just to name a few. Meanwhile, oil prices, they're trading back above $93 a barrel for the first time since September of 2014. In total, 27 commodities, ranging from the metals to the energies to soft commodities, they have tallied up double to triple digit gains within the last 12 months. Lithium, natural gas and uranium prices, they're up 497%, 240% and 219% respectively, whilst crude oil prices, they have more than doubled from this time last year and they're hitting new record highs almost weekly, up 335% from their 2020 lows. All in all, the evidence is mounting that a new commodity supercycle is firmly underway. The previous two supercycles, they took place in the 1970s and the 2000s. In both cases, the commodity sector resembled the identical telltale signs as it's displaying again right now. If history is anything to go by, then the stage is almost certainly set for commodity prices to skyrocket and reach new all-time highs ahead. According to Goldman Sachs, they have never seen the commodity markets this bullish before. In fact, it's no secret that banks and hedge funds, they are making multi-billions capitalizing on the week-to-week opportunities across the commodity supercycle, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven approach, they have already made in excess of 6 and 7 figures so far this year, and we're only 2 months into the year. Here are just some of the testimonials which have been flooding in from our clients, sharing their success and achievements. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2022 your biggest and best year yet, then now is the time to take action. Goldman Sachs has already begun preparing their clients for what they believe could be one of the most profitable years ever seen, and the early signs are already looking very promising. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the markets, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program. So with that, let's move over to the markets and we'll talk you through exactly what we're looking at here as we move into a new week. Well, gold prices, they had a blast off to the upside on Friday later on in the session as a result of the escalation in geopolitical tension between Russia and Ukraine. So we saw gold prices, they surged almost 3% last week. In fact, this puts both of our positions up over 1,000 points here on gold into Friday's close, where we've established those positions at 1,783 and 1,788 US dollars per ounce. As you know, we like to be very early to our trades, getting in at the beginning of the cycle, and this has enabled us to really benefit from this surge over the last couple of sessions in order to capitalize on the breakout all the way out back towards 5-month highs, the highest levels now since November of 2021. So what I'm looking at as we go into next week is whether we can just get a further push back towards the swing highs that were tested in the beginning of November here, and see if we can really come back up towards that 1865, 1875 zone. This is the plan now as we go into next week to take more profit off the table. What you tend to see out there is a lot of traders, they get their delayed confirmation, they see there's been a big move on gold, they then FOMO in, they end up buying at the end of the cycle, and they essentially get chopped up, they get liquidated using delayed technical confirmations, where typically they're using technical analysis, which is giving them a very delayed entry into the market, and they just get whipsawed out of their position. They cannot handle the volatility with gold. This is where it comes down to, again, utilizing data, cycles, research in the market, market intelligence, in order to get your positions on nice and early. Then you're in a good spot as we go into next week, where you can simply look at taking more profit off the table. So again, we want to see whether we're going to get a push back towards that 1865, 1875 handle as we go into next week. Ideal scenario for our positions would be that we get a run up all the way back towards the 1900 zone here. However, typically after big escalation in geopolitical risk, there can be quite a sudden sharp reversal to the downside, particularly once that safe haven bid starts to fade from the market. So once you start to see the narrative settle down, this is where you get risk on markets again, and typically gold would tend to pull back, which is something to keep on the radar here as we go into next week. Now, not only did gold have a big breakout on Friday, we also saw silver prices up last week, 4% to the upside. Again, the major buy area over the last month has really been that 22 US dollar per ounce zone, capitalizing on that area of support and getting in nice and early. Now silver prices, they're back trading at $23.50 per ounce. Very much like gold, I'd be interested to see if we get a further run up to the recent swing highs that were tested going back to the beginning of January here into next week, and see whether we can get some additional follow through. This is also relevant to platinum as well, which has been consolidating for a couple of weeks here. We want to see whether platinum is going to be able to break above the recent consolidation, the swing highs, and back towards those highs that were tested over the beginning of January. This then brings me over to crude oil prices. So we benefited massively on energies. Our energy position right now is up over 9,000 points. So we built into positions over the month of January. And again, our main job at the moment is to scale out more profit as we go into next week. We saw a 4.4% breakout to the upside on energies on Friday. Over this month so far, energies are up over 6%. We've made sure that we've had our exposure on to really capitalize on the current geopolitical situation that we're seeing at the moment, which essentially saw oil prices surge to the upside on Friday, closing at the highest levels in over 7 years. And now we've seen 7 consecutive weeks of gains on the energies here that we want to continue to capitalize on. It's a perfect time to capitalize on the energy cycle right now, given where inflation is currently running at 40-year highs. We've had confirmation of that with the CPI data last week, and of course the current geopolitical risk as well between Russia and Ukraine is further accelerating the surge higher here. Extraordinary times, they do create extraordinary opportunities, and right now we are living in one of the most exciting and rewarding periods ever in history. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself the gift of a better 2022. Right now you have an opportunity to make 2022 your best year yet, which based on our research we predict is going to be a record-setting year due to all the macroeconomic events that are currently unfolding. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. In these times of heightened volatility and rapidly surging inflation, the importance of having an essential income-generating skill like trading, it has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer just an option, it's a priority to make sure that you're inflation proof and that you can thrive in this highly lucrative climate, not just survive. If you want to gain that ultimate edge to really supercharge your wealth in these fast moving and highly profitable markets, you need to trade like the hedge funds, the money managers, the institutions. utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis or gimmicky technical indicators, that will not work, and you're guaranteed to get crushed and chopped up in these markets. You need to be utilizing data, statistics, market intelligence, alongside that learning and understanding the daily, the weekly, the monthly, the quarterly cycle for each commodity. Learn and understand capital flows in the market, key areas of liquidity, alongside that the intermarket correlations, the ratios in the market, macroeconomics, the fundamentals, the geopolitics, and of course how the hedge funds, money managers, banks and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.